So like, for example, the 381, if you bought it at 381, in my mind, I'm thinking like just trading stocks. Like, would the active price have to reach 381 for it to execute? Or like if you bought it at 381, you're automatically in the trade?
Nah, so the 381 strike is just a 381 strike. It does not matter what the share price is at. When you buy that, you buy it.
Okay, got it. Okay.
Yep. So it has nothing to do. Well, I mean, it does, but in a simple terms, it has nothing to do with the share price, because the share price could be it could be 375, and you could still buy the 381 calls. You follow me?
Gotcha. Okay.
So,
Understood.
So another misconception is this right here. If the share price is 379.38 like it is right now, and we buy the 381 calls, you do not have to hold this option the whole time until it gets to 381. Right?
Makes sense. Yep.
So in this example, if let's just say this 379.38 goes to 380, and we're in the 381 calls. Well, if we know that we make $50 for every $1 we move, but this moves 60 cents, we know that we're about to make a little bit more than half of that. So we're probably going to make $30 net profit on this trade. So at any given time, you have the luxury to sell back your option whenever you'd like. So you do not have to hold it until your expiration. You do not have to hold it until it hits a certain share price. Just know that if you buy a call and the share price rises in value, you're going to make money, unless you're buying something which is like way down here, and that's what we're going to get on next. Does that make sense, my man?
It does, man. Appreciate that.
Yeah, not a problem. So the delta tells us how much we're going to make for every dollar it goes up and goes down. So people always ask me, what strike do you like? What's this and what's that? Once again, my mistakes is your gain. I've done all this already. This purple shaded box, they're considered ITM, which are in the money. These two strikes right here are considered at the money. And then anything else down here are considered out the money. So if you ever hear someone say at the money, that's what I like. I like at the money. What's it stand for? ATM. I think of when I go to an ATM, I'm withdrawing money. It's coming into my pocket. If you take out of the money, that is the riskiest, right? If you take in the money, that is the safest. When you take in the money trades, if you notice, you're spending a lot more premium. When you take out of the money, they are pennies to a dollar, right? They do that purposely. People are attracted to the cheap prices. So in the option world, something you have to think about too, and I don't want to get too far in depth in this, but there is something that's called time decay. So when you buy a share, your share is always worth that value. But in the stock option world, if the company's trading zero all day long, you're going to lose money. When you buy a share, you don't make nothing, you don't lose anything. But when you buy a stock option and it trades sideways, you'll slowly lose money, right? Especially on the same day expiration. When you buy something that has extended time, you don't have to worry about that as much. So what happens is people come in and say, well, I'm going to buy 200 of these contracts right here, or 20 of them for $700, right? Knowing that for every dollar it goes in my favor, I'm going to make $140. So if I buy 20 contracts, I'm going to make $280, risking about $800, which is roughly about 40% ROI. That could happen pretty quick. I mean, SPY moves $3-4 in a day. So you only need a dollar move on that specific instance, right? Out of the money contracts are super risky because there's a thing like I just said about time decay. When you buy out of the money, they really decay. When you buy in the money, there's something that protects the time decay, which goes into the Greeks with like the theta, the beta, and the intrinsic value. But like I said, that's a whole different topic, not to confuse the new folks. Just know that when you buy into money contracts, you don't really have to worry about time decay. When you buy at the money contracts, I like at the money because you get the best bang for the buck. So I'm expecting these to go in my favor. So I'm expecting to go at the money, and they're eventually going to go in the money. You follow me? So I like that because from a dollar amount, oops, I meant to get my eraser. From a dollar amount, you're risking $160 or $200 for a contract versus when you start going into money, you're risking $350, $400, $500 for one contract. But when you go out of the money, this is dangerous to go to, because unless you get a big move very fast, more than none, you're probably gonna lose money. Why? Because think about it like this: if you bought 10 contracts for $330 and you got 20% ROI, that your $330 turns into $370 or $380. So from when you look at it from an option price, you're paying 33 cents, and every 6 cents movement, your 33 cents that goes to 39 cents. You're only up 6 cents on the option side, and 1 cent is going for your commissions, no matter what contract you trade. Versus if you buy a contract for $200 and it goes up 20%, you now have 40 cents of room, right? Which results into more money that's going into your pocket, and it's safer. So when you go out of the money, don't get trapped by that, because you need a larger move to play out just to cover the fees. So when you get a 10% move on any of these, think of it like this: like, it only got to go 3 cents. Are you going to be happy with 3 cents? Probably not. You know what I mean? Up here, you're at least getting 20, 30, 40 cents. You follow me? Which then gives you enough wiggle room to put a trail stop in. My last thing of the delta, I don't personally, like, I go out of the money, but my rule is if it's under 20 cents, I won't take it. So I need to at least 20 cents or higher as far as a delta standpoint. That is just me. So hopefully the option chain kind of makes a little bit more sense for you guys. If you want what I have right here, you left click this box right here and you press customize, and all I have is these 4 right here. I cut out all the other noise. I don't need anything else from a simple standpoint. That's all I need to know to make my executions, which puts us into our next variable. How the heck do you even take a trade? So now you understand stock option chain basics. I'm coming into the live chat room tomorrow. You might hear me say, I'm going to take a call or a put based off the floor and ceiling. So I'm always prepared, one step ahead, waiting for the trade to come to me. You remember this ask column. You always want to click in the ask column, whether you're on the calls or you're on the puts. If you click on the bid column, 381, since we've been picking on that all evening, if I want to buy this call, I left click this, and this drop down box populates, right? Do you see that? If I click on the bid, what happens? This box turns red. Red means you're selling. Green means you're buying. Well, if we want to sell the option, that's a different technique, and that's another day's topic. We are buying straight calls and straight puts. So you click on the ask, it turns green. Another thing to remember, you always need to make sure that you want to change this to the correct amount of contracts. Starting out from a basic standpoint, you'd want to take 1 contract, right? Then you come over here, you don't touch anything else until you get to the order type. The order type, you're going to change from limit to market. You press confirm, you press send, you're going to hear a dink dink. Guess what? You're now in a call. So when you're in a call, what happens is, I don't think I have any positions open. You're going to see a POS over here. Stands for position. Not piece of crap, it stands for position. You're going to right click it and you're going to press create closing order. Once you click that, it'll act just like you pressing the bid, and you're actually going to sell your contract. So whatever you bought, if you bought 1 contract, it'll then say -1. If you bought 10, it'll say -10. If you want to get out of the trade immediately, you change the order type from limit to market, and then you press confirm, you press send, you get out of the trade. Me, I change the order type to trail stop, and then I change my trail stop to 5 cents when I trade SPY. When I trade something that costs more money, I might do a 10, 20, 30 cent trail. But right now for SPY, I do a 5 cent. I press confirm and send. I keep this box open till it hits my stop loss or it hits my take profit. And that is all that I do right there. That is what I do to prepare myself. Then I press send once it's ready. Hey guys, you hear me say I'm risk-free? Guess what? I'm in the trail stop. I don't got to do anything else, right? You just bought your first call. We're going to walk through this again. How do you buy a put? Well, all right, guys, if SPY breaks the floor tomorrow, I'm going to look for a put. Well, what are you looking like, Brandon? I like the 378s. That's what I'm getting loaded up. I come to the strike price. I come all the way down, 378. Do we click on the bid or do we click on the ask if we're trying to buy it? I'll put it in the chat box. We clicking on the bid or we clicking on the ask? Which one we clicking on if we want to buy the option? Tracy says the ask.
Ask.
Hey,
Ask. Yeah.
that's right. Hey, you guys are rock stars. You click on the ask. This box turns green. I take 10 contracts. You may take one. There's people in the room that take 30 and 50 contracts. It's all relevant to your account size, right? I go over here. I change the limit to market. I press confirm. I press send, and I'm in the trade, right? Once I'm in the trade, I then come over here, right-click the POS, which you do not see right now, but just visualize it. And then it's going to bring the same closing order. It says 10, -10, which means I'm selling the 10 back. So I just bought this trade. I immediately go in here and I go to close this trade out, but I don't press send. So what I do is I come over here to order type. I press trail stop, change it to 5 cents, and I press confirm and send, and I keep this box open, and I sit here just like this, and I wait until it hits my stop loss or take profit, and bang, I then press send. And that right there is stock option basics 101. That's how you understand the chain, and that is how you understand how to buy the stock options. So you guys, does anybody have any questions? If not, we're going to recap the floor and ceiling, and we're going to recap the weekly hit list. All right, we're gonna rock and roll. So I got this right here. Clear drawing set. I got SPY up. We're gonna put on a 5-minute chart. So this is Thursday today, Wednesday, Tuesday, here's Monday, right? If you don't understand the floor and ceiling yet, we did an in-depth class on it. We could do it again, just not today. This is just a recap. So if you've taken a floor break, in simple terms, all we're waiting for is a breakout above the ceiling, a break down below the floor, and look what happened. Price rolled down on Monday. You're 1-0. You start your day off or your week off with a green bag. Or no, this is Tuesday, right? We didn't trade Monday. I'm sorry. We going the wrong way. This, where was it? 2. Yeah, we didn't trade 2. All right, so here's our first trading day, which is Tuesday. I'm sorry. All right, we broke the floor. That was a grand slammer right there. Anybody that started off on Tuesday, you got a winning trade. You're 1-0 for the week. Then we come into yesterday. We broke the floor right here. Price pushes down, and you end up getting a winner right there. You'd be 2-0. You come over here to today. Price broke the floor. Then it came all the way back up and then came right back down again. And I'm going to share something with you. When this happens right here, when it breaks the floor right here, goes against you, and then comes all the way back down again, I put a trail stop in once we break. So today really wasn't nothing. It was kind of like it was a small loss for me because the time decay ate me up. But it's all good because we were green the previous 2 days. We're still green on the week. So with this technique of the floor and ceiling, we expect to win 3, 4, or 5 days, right? If we go back other days of the week and we look at 1, 2, 3, 4, 5, 6 trading days, it broke the floor. There's 1-0. It broke the ceiling. There's 2-0. It broke the floor. There's 3-0. It broke the floor. 4-0. It broke the floor. You'd be 5-0. It broke the floor and you take a loss. You're 5-1.